Okay, well, with that, let's pivot back to corporate conversations then. And the company that we're looking at next is HUDCO. Reported a pretty steady set of numbers for the second quarter. Net interest income is up a little over 17%. And the company continues to show, a solid margin trajectory for the first half as well. The cost of funds has been coming down. We have with us Mr. Sanjay Kulshrestha, Chairman and Managing Director at HUDCO. Mr. Kulshrestha, thank you very much for joining in. Looks like another, pretty steady quarter for you. And you've already given us that guidance. You've said that as your book keeps shifting more and more to urban infra, your margins will improve. I think for the first half, you're just under 3% net interest margin. And what you told us earlier was that by the end of the year, you will get to about 3.3%. So is that trajectory on track?
Yeah, very well. I think we are on the track, and it's a half-yearly result. And you also understand there are so many businesses that we are doing, and a lot of business potential is there in the urban investment. And I'm pretty sure that we will be maintaining the figure of 3.3 in the NIMS, net interest margins, and at the same time we will keep the business ongoing in the same rate.
Okay. All right. Hi, Mr. Kulshrestha. And
Hi. Good morning.
Good to have you on the show. So we got the point out on NIMS. What about growth? You'll have to revise the estimates, right? Because going by the half-year number, it's looking spectacular. So give us the fresh guidance, both on disbursements as well as on the AUM target. Because as of now, those numbers, they will need to get revised. So for the year, what are you looking at?
Yeah, you are right. We need to revise our number, and we had started revisiting the projects and the potential on. Since we had signed a lot of MOUs, you may have seen that around 8 to 9 lakh crores of the MOUs are signed, and there is a tailwind, and we have now launched this urban invest window also, which will become a platform for all urban investment. So we need to revise our targets. That is the guidance that we had given of 1.5 lakh crores by FY26. So we had revisited, and the initial figures we are targeting is 1.6 lakh crores by FY26. But we had not worked out for FY2030. We are maintaining it as 3 lakh crores as well.
Okay, got it. So that's the numbers out of the way, both on the growth of the loan book and the margin. It's looking really, really solid this year. Now, give us some little bit of qualitative color on this. For the rest of the year and going into next year, which are the urban infra projects that are going to drive this growth? And I just want to understand which of the projects are most profitable for you from a margin perspective as well. So which ones will you bid for more aggressively?
I think if we see the greenfield projects, they are more profitable. If I compare with the refinancing kind of projects, the road sector is giving quite a fairly good kind of spreads and the NIMs for the books. We are only compromising on the social sector, that is the housing, that too for the affordable housing. And this is coming out as a counter requirement of the state governments. Presently, they are not coming up to take these kind of loans, and they are managing themselves. So I didn't look that we will be compromising on our names, but all greenfield sectors, and I think they are very promising, and we will be maintaining our spreads on these kind of sectors.
So yields are highest, you're saying, on the road infra side?
Yeah. On the surface infra side, if you see, there are good projects which are lined up, and these are huge capital which has to be infused. And there is a proper planning also. And now we had also started this private sector lending in 5 sectors, including road, port, airport, which is all mobility related. Others are the energy or power, and last one is the real estate, which is our niche sector. So I'm very hopeful that with all these kind of initiatives like private sector or urban invest window, our growth momentum will keep on going.
Sir, one more question, because speaking to you, we also get a pulse of the overall capex movement in the economy, right? And clearly there's a lot of infrastructure spending happening, and your book is telling us that. So can you give us some split between private and public? How is your book looking now? And are you getting a lot of fresh inquiries from the private sector as well? And if yes, then for what kind of projects?
We are getting a lot of fresh inquiries. Entire spectrum of the project, but we will remain selective towards the private sector projects, and will not compromise either on the entity side or on the project side. Project should be well placed with all the approvals in line, including land availability, And at the same time, they will be backed by the good concessionary agreements, maybe HAM kind of projects. And the entity should be really strong to take our funds.
And
So we will
what's the
not compromise.
contribution, sir? What is the contribution
So
of the private sector to the book now?
presently, there is no performing asset or from the private side. Maybe
Okay.
it will start growing, maybe 3-4%. But there we have not set any target for the private sector.
All right, sir, I just want to push you a little bit. The AUM target of 3 lakh, by 2030, that means you'll have to grow in high teens, but you're talking about growing in mid-20s. So actually, the 3 lakh crore could actually come in closer than, that 2030, if I could just quiz you on that. And also, I missed the number for this year, disbursements, sanctions, what is the number likely to look like for FY26?
So I will start from the disbursement. Last year we had disbursed around 40,000. This year we are targeting around 50,000 crores. Similarly, on the sanction side, last year we had achieved slightly more than 1 lakh, around 1.21, 1.23. This year we are targeting 1.5 lakh crores. We had already achieved around 93,000 crores in the sanction pipelines. And we are hopeful to achieve around 1.5. And you are right that we need to revise and revisit our targets for 2030, but it is too early to comment on that because there are a lot of potential which we see, and including the Urban Challenge Fund. And just on the weekend, there was a urban conclave also, and we were discussing that how to lift our face of the cities, and we have to create around 50 global cities. So a lot of investment is required in the city side, and they will become the growth hub. And as we all know that they contribute about more than 60% of our GDP. So we are working on the cities, we are working on the infrastructure. Because cities are the face of our country, and to become the Viksit Bharat, around 80 lakh crores of the city investment is required. It means around 5 to 8 lakh crores of investment per year. So it's a huge investment in the cities, and we are planning our financials and the ratios so that we will be positioning in the best way.
Yeah. Final question, sir. Going back to the margin, where you're saying that you'll definitely be above 3%, 3.3, right, by the time the year ends. What is the borrowing mix looking like? Because your cost of funds has been coming down. Obviously, interest rate cuts here locally would have helped. What's the current mix like, and what are you thinking for the second half?
I think regarding income, definitely 3.3 is a achievable level, and a couple of projects we are on the advanced stage of resolution. So we were expecting the Q2 only, but nevertheless, we are on the right track, and the income will come from the resolutions as well. At the same time, we are expecting that market is projecting that there will be another rate cut from the RBI, and we are very hopeful. So we had managing our treasury in such a way that the benefit of the rate cut will come as soon as possible. It is decided by the RBI. We are also planning ECBs in yen denominated, and we are also planning the GMTN. So since Fed has already started some melting down, but we are it's a kind of wait and watch that we are doing because USD, we are planning to take some USD loans also. But we have to see what kind of interest rate they will come. But at the same time, domestic funding is coming very aggressively, and very good options are there. And with the expectation of the rate cut, I am very hopeful that most of our funds will come from the loans and the bonds. And around we are planning around 500 million from the international commercial borrowings.
Sir, we'll leave it there. Good conversation. Thank you very much for joining us, and really appreciate you being with us. Yeah, appreciate it.